JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 13th of October 2021. So welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, we'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top. So now then, jumping into the charts, guys, the first one I want to pick up here is Nikkei 225. The index kind of remained somewhat flat, I would say, but well, maybe just actually slightly in the negative territory, but continued to trade near this downside line. And to be honest, looking at this picture, given that it kind of got violated a few times here, we can actually get rid of it now. And what I can draw here, maybe instead I can reuse it and draw this little short-term tentative upside line just for now. Again, we're not going to really focus on it too much, but I'm just going to keep an eye on it in case the index does respect it. But at the moment, basically the situation here is that the index continues to oscillate around that 200-day EMA. It's not really moving much here, I mean, from it, so in a way we're kind of waiting for maybe a better move here. So let's say if we drop again below this 200-day EMA, certainly yes, this could open the door towards slightly lower levels. However, we have this 27,481 territory, which did provide support previously. So again, even if we drop below that 200-day EMA, then we'll watch out for that little hurdle here. In terms of the upside, if of course the index continues to trade above that 200-day EMA, then yes, there could be a nice rebound. However, I would rather wait maybe for a push at least above this 28,581 territory, which is the current highest point of this week, and a nice good pop above it, would confirm a forthcoming higher high and potentially could lead to some higher levels. But again, this arrow that I've drawn here, I mean, this is the one of the scenarios that I'm going to keep an eye on. However, like I said, for now let's play it a little bit more simple. Like I said, keep your eyes on this 200-day EMA and of course this 28,581 zone. Shanghai Composite, very quickly on this one. So this one, although it's it has these huge swings here, however it still remains in between these two lines, the ones that I drawn last week, and this you can see that it's kind of getting into a bit of a squeeze. So there's less room left for it to kind of trade in. So let's see which way this one's going to pop, and let's see which way this is going to go eventually, at least in the near term. So in a way, for even if we, let's say, see a break through one of these lines, still to be a little bit more on the safe side, probably we can stick to one of these levels right here. And for example, the high of this week, the current highest point of this week, near the 3,614.15 level, approximately around here, a nice good pop above it. We could open the door towards higher levels. For the downside, I would rather, like I said, I would rather wait maybe for a drop somewhere below. Well, previously I talked about this 3,518 zone, but now we can keep an eye on this hurdle here, which is the the current lowest point of this week near the 3,515 level. And then we'll take it from there. But again, like I said, if we, let's say, for instance, we violate the downside line, yes, this could open the door to its higher levels, but just to get a little bit more comfortable with the upside, then yes, we could go for a break of this barrier first. For the downside, the same story. We would like to see a break of this upside line first, but then just to be a little bit more careful, a drop below the 3,515 level might do the trick for a few more sellers. Now then, I can see in chat room here, Erica, good morning to Yep, I hope you're having a wonderful start of Wednesday. So I hope everybody's having a wonderful start of Wednesday, guys. So coming back to the charts, Hong Kong's Hang Seng index continues to trade below this downside line taken from the high of the 28th of June. Now I talked about this one this week, and I said that keep your eyes on this downside line because, excuse me, basically, at the moment it's a bit of a tricky one here, and yeah, so let's see. Today the market is, of course, is closed, and let's see which way this is going to go, because again, at the moment, let me just bear with me one moment. Seems to be, yeah, the Hong Kong's Hang Seng index is not not running today. So well, yesterday it ended the day still below this downside line, but above the 21-day EMA. So again, we're kind of playing it safe, or at least trying to do so. We're waiting for a violation of one of our levels here, and for the downside, I would rather maybe stick to this 24,695 territory, 94-95 territory. A drop below this may open the door towards lower levels, but for the upside, well, at least a push above this downside line would be needed, but then also keep your eyes on the current highest point of this week near the 25,437 level. The German DAX, so yesterday recovered, or I would say tried to recover somewhat, but again, this was the typical situation again, because it opened with a gap lower, but then quickly filled it, but was not able to kind of stay in the positive territory, and yep, still ended the day in the negative zone. Looking at the cash index right now, we'll see that the price is trading at around 15,146 level, actually bang on where it ended yesterday. So that's going to be quite interesting, of course, to see if it actually manages to make its way higher. But again, I'll stick to the same idea that I mentioned before, that I'm looking at this area right here, especially this 15,250 level. A nice good pop above it, yep, may open door towards the upside. However, if the index reverses sharply to the downside and falls somewhere below this 14,983.84 level, which coincides also with the 200-day EMA in our daily chart, then, well, this is where it could become a little bit more interesting for a few more sellers. The S&P 500, so the index is still struggling with this downside line, although we saw a few pushes through it. Still, this downside line taken from the high of the 9th of September is the one to watch for at the moment, of course, because again, we are very close to it, but it continues to hold. So yeah, in a way, for those bulls, I understand that you're all waiting for a nice break of it, maybe, but wait for that break first. Of course, if it happens, and then we could consider some higher levels. But at the moment, it's a bit of a maybe a bears territory. So again, let's see how this is going to play out. The cash index is currently sitting at around 4,343 territory level, sorry, slightly below yesterday's close, but above slightly above the 100-day EMA. So kind of this is the maybe the last, not the last, but one of the options here for the bulls is to see if it rebounds from this 100-day EMA, then maybe we could see a reversal back up. However, again, don't really rely on this 100-day EMA too much, because again, if you can see in the past here, in the recent past, in the beginning of October, it kind of got violated, but the index did oscillate around it and then kind of reversed back to the upside. So maybe something similar could happen again. So that's why better stick to some of the levels. DXY, the dollar index, so this is a tricky bit here. So we did push higher, we did overcome this 94.50 level, but as you can see today we did stay fractionally above that hurdle, but now we're seeing a bit of a reversal. So again, the question here is, can this push higher? So far, yes, it's still trading above this upside line, but the fact that it kind of struggled with this 94.50 level gives us, or should I say, puts us a bit on the cautious side. And let's see if this upside line won't get broken today. If it won't, then, well, we'll continue targeting the upside. But however, if it starts getting violated, then, well, maybe a bit of a setback here could be possible. Silver, so silver, interesting, looking very interesting, because basically on one hand, from the very short-term perspective, we might see here this one as a little inverted head and shoulders pattern. However, on the bigger picture, it's still trading below this downside line taken from the high of the 11th of June. So in other words, yes, we could see maybe a pop higher, especially if, for example, if DXY starts dropping below this upside line, we could see silver maybe pushing a little bit further north. However, be very careful near this downside line, because if it continues to hold, then, well, maybe we're not really done with the downside yet. So keep that in mind. If we break this downside line, certainly yes, this could open the door to its higher levels, but let's be a little bit more on the careful side. And yeah, keep your eyes on, let's say, for example, on this high, the current highest point of October, near the 23.819 level, and then yeah, we could take it from there. So for now, long story short, guys, from the very near-term perspective, I would say there is a chance for this one to move higher. However, a lot will depend, of course, on DXY here and in general the market sentiment. But be very careful near this downside line, because if it holds, then another slide could be possible. Now, jumping into WTI Oil. Now, of course, the current problem of the world, I would say, because the prices continue to rise. I mean, inflation continues to rise due to that as well. So yeah, at the moment, it's quite interesting to see where this is heading. For now, I would say we have this level here, the 82.15 level, which we've managed to reach on Monday. Currently, that's the highest point of this week. So if we do break that, then yes, we'll go for some higher levels. But if we struggle to break that hurdle, then maybe we could see a bit of a retracement here. However, again, like I said, keep your eyes on DXY, because if that starts dropping heavily, then, well, then yes, we could see oil pushing further north here. So let's keep an eye on this one. Litecoin. So here we have a situation where it seems that it's kind of weakening, but it's still running above these EMAs here on our daily chart. So, and I would say at the moment this area is acting as a good area, as a good support level. You can see that my downside scenario, for example, is still from somewhere around here, this 161.48 level marked by the low of the 4th of October. So a nice good drop below it, yep, may open the door towards lower levels. For the upside, well, I would rather maybe wait for a push above the 187.22 level right here. This way, yep, this would confirm a forthcoming high, and yep, potentially could attract a few more buyers into the game. So keep that in mind. But for now, basically, again, yeah, like I said, long story short, I mean, we can't really do much. I'm going to take a neutral stand on this one right now, and yeah, I'm going to continue observing the price action and how it's going to perform around these EMAs here, and of course in relation to these two levels that I just mentioned. Now jumping into a few pairs, AUDJPY, guys. Now look at this spectacular move. Last time when I talked about AUDJPY, I said that we were still kind of hanging in this little triangle, but I said that if we violate one of the sides of it, then this could open the door to its higher levels. And yep, so we violated the upper side of this triangle, and we pushed higher. We managed to reach the highest point of September at 82. We overshot that, and yep, we continued to rally, and basically we just kind of we're not far from this high, the high of the 25th of June, together with the highest point of July. So yep, we're not far from this little territory right here. Very good potential area for resistance. However, of course, I understand that we maybe have already moved quite decently higher. However, again, for now, there's no clear signal for a reversal at the moment. Yes, we're seeing this little retracement here, but again, could be seen as just as a temporary correction before another possible leg of buying, especially, for example, if the rate stays somewhere above this hurdle, this 82.82 level, which marks the inside swing low of the 30th of June and the high of the 13th of July. So a very nice potential area here to keep an eye on. So something like this could be possible if, like I said, if we do see a bit of a retracement here, then keep your eyes on this hurdle, this 82.82 zone. If that holds, a nice little rebound here could be possible. For the downside, if we drop below this 82.82 zone, then, well, we'll go for a bit of a larger correction to the downside. Similar story here is on USDJPY. So yes, we had a good run. We found resistance near the 113.71 level. Now we're seeing a bit of a retracement here. However, if the interesting bit here, will we get that larger retracement to the downside? At the moment, again, I would say keep your eyes on the equity world and on the indices. If those slide and DXY slides as well somehow, then, well, we could see this pair drifting nicely to the downside as well, because again, weaker dollar, the yen buying will resume, and yep, we can see the pair moving towards this upside line maybe initially, but of course the upside scenario is still not off the table, especially if the pair pushes through that 113.71 level, and then yes, we could go excuse me, for some higher levels. And one of the levels that I'm going to be keeping an eye on will be this highest point of October of 2018, and that's roughly around that 114.54 level. Now jumping into USDCHF. So if you remember a while ago, and well, actually not a while ago, this week as well, I talked about this one, and I keep talking about this rising veg pattern. So of course, according to all the T rules, these tend to break to the downside. However, until we get that break, we cannot really kind of get comfortable with the whole kind of concept here, because again, as long as it stays inside this pattern, the trend is still the short-term trend is still to the upside. But of course, if we violate the lower bound of this rising veg, then yeah, this is where it could become a little bit more interesting for a few more sellers. I'm not really drawing any lines, neither support nor resistance lines yet, because again, this continues to move inside the pattern, so that's why I would rather wait for a violation of one of the sides of it. Now jumping into US dollar against Russian ruble, now this is where it's quite interesting, because basically on Monday we saw a huge spike here to the upside, and look at this downside line taken from the high of the 20th of August, which acted perfectly as a good resistance area. Now my initial idea was that we might see a rebound, maybe a hold up somewhere near this 72 territory, and in a way I would say it's kind of partially worked out, because we did overshoot it, of course, on Monday, yes, but then we quickly drifted back down. We stayed below that hurdle. Then then yesterday we did push higher again, but this 72 territory did provide resistance again, and yep, we saw this little decline. So now looking at this picture, so far so good. Let's see now if we can break the current lowest, well, actually this key support zone, and let me just actually mark that on our chart here just for our future reference so that we would have it all here. So yep, if we drop below this hurdle, the 71.55 territory, if we break below it, then this will confirm a forthcoming lower low, and certainly more sellers could join in, so it could be quite attractive. However, similar story, different story here is on the US dollar against the Turkish lira. We can see that the Turkish lira is, well, it's struggling. It's struggling. It did reach that one of my targets when I said that if we pop above the current, well, that time the previous all-time high near the 8.95, 95.57 territory, then my next target is that psychological 9 level, which we managed to overcome and overshoot. Basically, the Turkish lira, if we took a look at the monthly chart here, you can see how it continues to depreciate, and of course some of the short sellers here are looking forward maybe for a bit of a retracement to the downside. However, guys, again, be very careful, because at the moment there is no clear signal for that, and it could continue rallying. Unless we see maybe a strong decline from the dollar side, but even then we'll see if the Turkish lira won't be still weaker than the US dollar if the US dollar declines. But so yeah, at the moment from the technical side, yes, this is still let's say looking towards the upside. So let's see if how far, or should I say, let's see how far this can travel. In a way, if I can draw maybe a Fibonacci extension here, but let me just quickly grab this one, and depending on how we're going to draw it, maybe we're going to actually capture this reversal here and this strong resistance here, and then when it found support last time here, then we'll see. Actually, let me just drag this one a little bit like this. There we go. So roughly we can see that, for example, the 50% retracement, 50% extension on the Fibonacci here, on the Fibonacci extension, 50% level is at 9.2125 territory. So could be a good target to keep in mind. But again, don't really rely on this one too much. I mean, this. For now, let's go slowly, step by step on this one, and yeah. For now, like I said, it is leaning a little bit more towards the upside. GBPUSD, guys, so this one is quite interesting today. Keep your eyes. Oh, actually, we did get the GDP numbers already. So, so yeah, and the manufacturing production numbers from UK. So we not huge actually movement here. Let me just jump quickly into a 30-minute chart. Okay, so this was just a move here, about 15-20 pips. Not a significant one, but looking at the overall picture, you can see that the pair is still hanging in there and still not really moving lower. And the moment, I would say, keep your eyes on it, although yes, we're below all of the EMAs here on the daily chart, so in a way there could be a sign of weakness. However, as you can see, after we reversed here from this 1.3412 territory, we moved higher. We then started consolidating here, and we started moving sideways a little bit near this 21-day EMA. Maybe this is just a little pause before a further move higher. However, for now, stay careful and cautious. It's a similar picture as with silver and gold here, but basically, if we do pop above that 21-day EMA, then yes, we'll slowly aim higher. We'll aim for that highest point, the current highest point of this week, near the 1.3674. A nice good pop above it, of course, we could open the door to its higher level. So keep that in mind. For the downside, I would rather stick to maybe to drop below the 1.3518 level right here, and then go for the downside. Now Euro CAD, now this one's quite interesting because basically after quite a decent decline that we had here, you can see that the pair is now trying to recover somewhat, or should I say the bulls are trying to fight back. And if, let's say, this has been the bottom here, and if we draw, let's say, the Fibonacci retracement here, then we'll see that the 23.6% retracement, the first one, is near the 1.4525 level. So basically there is still room to fill, but the question, will it do that? That of course remains the important question. At the moment, I would say be very careful. Yes, we could see maybe a bit of a retracement here back up, but we can draw this downside line here together with the Fibonacci extension. There we go. So we have this downside line as well, but you can see that even if the 23.6% retracement on the Fibonacci is quite tempting, still there is a downside, the steep downside line, which we need to keep an eye on, and that could kind of spoil the whole, ruin the whole party for the bulls here, and it could slow down somewhere near the steep downside line and then resume the slide if it remains intact. And finally, Euro USD, guys. So yep, we're seeing a nice little rebound here from this hurdle, this 1.1529 zone. So that's in a way great news for the bulls. Also, like I said, weakening DXY is giving a hand here to those buyers of Euro USD. Again, everything is looking quite interesting for today. I mean, maybe could be quite positive, but again, keep your eyes on this downside line, guys. And if this somehow continues to provide resistance, then well, maybe we're not really done with the downside. So keep that in mind. However, if we break that, certainly yes, higher levels could be met. We could go for a bit of a larger retracement here to the upside, but at the moment, all eyes are going to be on this downside line here, and together with this 1.1529. If we do somehow drop below it again, then yes, maybe this will confirm a forthcoming lower low. Evu, yep, I can see your question here. Yes, EURUSD, I will pick it up on tomorrow. Unfortunately, like I said, I need to make room right now, make space for my colleague who's joining in, who's jumping in after me. So yeah, I'll look at that one tomorrow. And yeah, guys, I hope you found it useful. Well, as always, I really hope you did that. You know, you did find it useful. So, and thank you very much for watching and listening. Thank you very much for joining in. I really appreciate your views, your likes, your comments. So as always, if you want to catch me tomorrow, as always, at 6 o'clock GMT time. So thank you very much, guys, and I'll see you later. And oh, by the way, of course, have your stop losses in place. Thank you very much, and bye-bye.